Hey everyone, welcome back to the channel. Today we're diving into one of the most influential personal finance books of all time, Rich Dad Poor Dad by Robert Kiyosaki. This book has sold over 40 million copies worldwide and changed how millions of people think about money. Whether you're just starting your financial journey or looking to level up your money mindset, this summary will give you the key lessons that can transform your financial future. Let's get started. So what's this book about? Robert Kiyosaki tells the story of growing up with two influential father figures. His biological father, the poor dad, was highly educated with a PhD and worked as a superintendent of education in Hawaii. Despite his impressive credentials, he struggled financially his entire life. His best friend's father, the rich dad, never finished 8th grade but became one of the wealthiest men in Hawaii through entrepreneurship and smart investing. The book contrasts their completely different philosophies about money, work, and wealth. And here's the kicker. Both men worked hard and were good people, but their financial outcomes were completely different because of how they thought about money. This book is Kiyosaki's account of the lessons Rich Dad taught him that led to financial success. Lesson 1. The rich don't work for money. Why the first major lesson is mind-blowing. The rich don't work for money. Instead, they make money work for them. Most people work hard to earn a paycheck, but they're trapped in what Kiyosaki calls the rat race. You work for money, pay your bills, and need more money, so you work harder. You're essentially working to make your employer rich and the government rich through taxes. Rich Dad taught young Robert that fear and greed drive most people's financial decisions. Fear of not having money makes you work hard, and greed makes you want more, creating a never-ending cycle. The key lesson? Learn to have money work for you by acquiring assets that generate income rather than trading your time for money indefinitely. Think about it. When you work a job, there's a limit to how much you can earn because there's only so many hours in a day. But when your money works for you through investments and businesses, there's no ceiling. Lesson 2, WHY teach financial literacy? Lesson 2 is all about financial literacy, and this is where things get really practical. Kiyosaki argues that our schools teach us nothing about money. We learn math, science, and history, but nobody teaches us how to manage money, invest, or build wealth. This is a huge problem because financial ignorance keeps people poor. The foundation of financial literacy is understanding the difference between assets and liabilities. And here's where Kiyosaki gives us a simple definition that changed how millions think about money. Assets put money in your pocket. Liabilities take money out of your pocket. That's it. It sounds simple, but most people get this wrong. They think their house, their car, and their possessions are assets. But if these things are costing you money every month in mortgage, insurance, maintenance, and depreciation, they're actually liabilities. True assets include things like rental properties, stocks, bonds, businesses, royalties, and anything else that generates passive income. The rich focus on acquiring assets. The poor and middle class acquire liabilities but think they're assets. Lesson 3. Mind your own business. Lesson 3. Mind your own business. This doesn't mean quit your job tomorrow. What it means is, while you keep your day job, start building your asset column. Most people confuse their profession with their business. Your profession is what you do to earn a paycheck, whether you're a teacher, engineer, or accountant. But your business is your asset column, what you're building that will eventually create wealth. Kiyosaki says to keep your day job but start investing in real assets. Real estate that generates rental income, stocks that pay dividends, bonds, intellectual property, businesses that don't require your presence to run. The goal? Build your assets until the passive income they generate exceeds your expenses. That's financial independence, and it's available to anyone willing to mind their own business. Too many people spend their whole lives working for someone else's business, making their boss rich instead of building their own wealth. Lesson 4. The history of taxes. Lesson 4 dives into taxes and the power of corporations. Here's something most people don't know. Income tax wasn't always around. It was originally designed to tax only the rich, but eventually it became a burden on the middle class while the wealthy found legal ways to minimize their taxes. How? Through corporations and financial intelligence. The rich understand that a corporation is a legal entity that can own assets, earn money, and provide significant tax advantages. When you earn money as an employee, the sequence is earn, get taxed, then spend what's left. But when you earn through a corporation, the sequence is earn, spend on legitimate business expenses, then pay taxes on what's left. This is completely legal and makes a huge difference in how much money you keep. Kiyosaki emphasizes financial IQ, which includes accounting, investing, understanding markets, and knowing the law. These skills help you keep more of what you earn and grow your wealth faster. The lesson: don't just work hard for money. Work smart and understand the rules of the game. Lesson 5. The rich invent money. While Lesson 5 is about financial intelligence and creativity, Kiyosaki says the rich invent money. What does that mean? It means they see opportunities that others miss. While most people see problems and obstacles, financially intelligent people see opportunities and solutions. This comes down to financial intelligence, which has two parts: technical knowledge, understanding financial statements, investing, markets, and law; courage, the guts to take calculated risks when opportunities arise. He shares stories of buying undervalued real estate, creating win-win deals, and using creativity instead of money to make money. The key is developing your financial IQ so you can recognize good opportunities and have the courage to act on them. Most people say, "I can't afford it." Rich people ask, "How can I afford it?" That shift in thinking opens up possibilities. Lesson 6. Work to learn, not to earn. The sixth lesson challenges conventional career wisdom. Work to learn, not just to earn. Kiyosaki worked in various jobs early in his career, not for the paycheck but for the skills. He joined the Marine Corps to learn leadership, worked for Xerox to learn sales, and took other positions to gain diverse experience. He argues that specialization, while good for earning a salary, can be a trap. The world rewards those with diverse skills. Instead of becoming a narrow specialist, become a generalist who understands multiple aspects of business. The most important skills to develop: sales and marketing, financial literacy and understanding, numbers, communication and leadership, legal and tax knowledge. Many highly educated people struggle financially because they're specialists who never learn to sell, manage money, or run a business. They're one skill away from great wealth. Don't just work for money or security. Work to learn skills that will make you financially free. Overcoming obstacles. Kiyosaki also addresses the main obstacles that prevent people from financial success. Fear, especially the fear of losing money. Everyone has fear, but it's how you handle it that matters. The rich take calculated risks. The poor let fear paralyze them. Cynicism, the voice that says, "What if this doesn't work?" Or "That's too risky." This negative self-talk kills opportunities before you even try. Laziness. This often disguises itself as being too busy. People are too busy working to take time to improve their financial situation. Kiyosaki calls this lazy. Bad habits, like paying everyone else first and yourself last. Wealthy people pay themselves first by investing before paying bills. This creates positive pressure to find more income. Arrogance. thinking you know everything or being too proud to learn. Ego combined with ignorance equals arrogance. When you don't know something, educate yourself instead of pretending or ignoring. The key to overcoming these obstacles? Take action despite fear, maintain optimism while being realistic, prioritize your financial education, develop good money habits, and stay humble and open to learning. Getting S to your TD, so how do you actually get started? Kiyosaki gives us practical steps. Find a reason greater than reality. Have a powerful why that motivates you. What do you want financially? Why do you want it? This purpose will sustain you through challenges that make daily choices. Every day you choose what you do with your time and money. Choose to invest in your financial education and assets instead of liabilities and distractions. Choose friends carefully. Surround yourself with people who talk about money and investing, not people who complain about never having enough. Your network affects your net worth. Master a formula, then learn a new one. Learn one way to make money, master it, then expand. Don't jump around constantly, but don't get stuck either. Pay yourself first. Before paying bills, invest in assets. This creates pressure that motivates you to find creative solutions and additional income. Choose heroes. Find people who've achieved what you want and learn from them. Model their strategies and mindset. Give and you shall receive. Be generous with your knowledge, time, and money. What you give comes back multiplied. CO and CL SIO, and so there you have it. The core lessons from Rich Dad Poor Dad. The big takeaway? Financial success isn't about how much you earn. It's about how much you keep and how hard that money works for you. It's about financial literacy, acquiring assets, taking calculated risks, and continuously learning. The path to wealth isn't working harder at your job. It's about financial education, building assets that generate passive income, and making smart decisions with your money. Start today. Read books, take courses, find mentors, and most importantly, take action. Start. Small if you need to, but start. Your financial future is in your hands. If you found this summary helpful, please give it a thumbs up and subscribe for more book summaries and financial content. Thanks for watching, and I'll see you in the next video.